FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to, and perhaps even watching, the Financial Survival Network. And today is 10/14/20. Well, our good friend Michael Pento is back with us. Pento Portfolio Strategies. And, well, what do you say here, Michael? I mean, so much has happened. So much is happening in such a short period of time. How do you keep track of it?
Well, first of all, thanks for having me back on your very popular program. It's my pleasure. I just come back to the same thing I say, all the time. You just can't have this Wall Street dogma of buy and hold style of investing any longer. It just doesn't work. I mean, you imagine if you have your, portfolio divided in some proportion with stocks and bonds, and you ignore the fact that stocks are at an all-time bubble high, even dwarfing what they were in the year 2000, as far as total market cap to GDP. We're now at 185%. Valuation. I mean, it's just incredible. Way higher than 2007. We were only at 100% in 2007, 145 in March of 2000, 185%. I mean, my God, this is incredible. And of course, because of sovereign manipulation from central banks on the part of the sovereign debt market, you have Italian 10-year, I'm Italian, so this is taken personally here. The Italian sovereign debt market yields lower than the US 10-year Treasury.
Yeah.
Kerry, 63 basis points, 0.63, going out 10 years on a nation that's notorious for creating inflation and going bankrupt. So what are we doing here? What are we setting us up for? And I can answer that question. I think you're going to set up eventually for a depression. I'm so sad to say this, but I say this coming from mathematics, from economics, real economics, and from honest analysis. We're setting ourselves up for an inflationary and insolvency implosion of the global sovereign debt market.
Yeah, and as we saw, I mean, look, Michael, you're a financial expert, and you know that the world moves on credit. And back in our wonderful days of 2008, 2009, during that financial meltdown, I heard rumors, I've never been able to confirm it, you know better than me, that the trucks that deliver food to the supermarkets were 3 days away from stopping because the letter of credit market had all but imploded because none of the banks trusted any of the other banks. And you can't do anything in this society without ready access to credit. You don't have that. I mean, look, I worked with people who had judgments against them for years, and they were literally shut out of the banking industry, the credit industry. They couldn't open a bank account because attorneys would grab their money, their jobs, they have their wages garnished, and really they were like second-class members of society. If you think that the big corporations that access to credit throughout both large corporations, the whole corporate sector, and the whole governmental sector somehow gets shut down because of a loss of faith confidence event, the results of this are catastrophic.
We have a debt-based monetary system throughout the whole world, so it's no surprise that the grease or the oil behind the economic engine is freely functioning banking system. And I'm not against credit, and I know you're not against credit either. But here's the thing: we now have total debt in the United States is now 390% of GDP. Kerry, that's an all-time record high, even after the Great Recession, when that ratio shot up because the denominator just crapped out. So here's the point. In 2019, we were told that this is the best economy the world has ever seen. Remember that, right?
I think I said that. Yeah.
We had in that year a deficit that was 5% of GDP. So well above nominal GDP growth, hence the debt is rising. And I'm asking myself, if we can't, forget about paying off the debt, if we can't stop adding to the debt at one of the worst cases since World War II. During the best economy we've ever seen, what happens in the bad times? Well, we answered that question. A year later, we had the Wuhan virus hit, and we ran deficits this year, fiscal 2020, 15% of GDP, $3.3 trillion. And by the way, when the Fed says, go big, and Donald Trump says go big, and the Democrats say go big, everybody wants to borrow big. But when is it ever going to be time to go small and pay back the debt? I guess if you read the book, deficits don't matter. I mean, we have now discovered, through the economic intellectual evolution of thought that, well, the government does have money. The government doesn't just take your money. The government does have money, and it's called the printing press, and it can run at full bore without any consequences.
Hey, well, we go back to France during their hyperinflation after the revolution and all that, around the revolution, and the printing presses were running full bore 24/7. Imagine if they had the ability to create digital francs, how much faster it all would have come about. But, they were limited by the technology of the day. Maybe they'll come up with a new way to create money that's even faster than the digital printing press. But I have my doubts about that.
Well, here's my point is, what are we getting for all this money printing? I mean, we have a trend GDP growth that's 2%. You had population growth plus productivity growth. You get around 2% in this nation, the entire developed world, as a matter of fact. We borrowed $3.3 trillion in fiscal 2020. We printed all of it. 100% of it was monetized by Mr. Powell. And we have a stock market. What do we get from all this? We have a stock market. The S&P is up about 5% for the year. I mean, not much. And our GDP will shrink by 4% in 2020. So what are we really, what are we getting here other than a bifurcated society, which is eviscerating? It is wiping out the middle class, not only in America, but even in Japan and in Europe. The middle class is going away. And all classes, except for the very rich, are becoming impoverished. So they're all going down their spending power. This is what we see over time. And I analyze this for a living. I'm not, making up numbers here. Go read the report put out by Oxford Economics about Japan. Their middle class is going away, and they're all becoming poor. And there's no better example I can think of a nation that pursued this Keynesian philosophy of just debt, deficits, and monetization. Look at the Bank of Japan's balance sheet, how it's exploded. Look at their debt to GDP ratio. It has absolutely exploded. But their stock market, the stock market is barely up, and it's down, barely up this year, and it's down 40% since 1989. But what are we getting out of all this? This desire to live in a quixotic fantasy world instead of economic reality. Is it all about control over government control over our lives? Oh, by the way, can I just add real quickly to that the Bank of Japan, the BOJ, has just gone down the road of experimenting with what, Kerry? Cryptocurrencies, not Bitcoin, a government-backed cryptocurrency. And I know this. I know in my heart this is what it's all about. It's all about usurping control from the private individual. What you're doing with your money. What is the interest rate you're going to get on your savings, which I can guarantee will be profoundly negative if they ever launch a public blockchain currency.
Hey, we know that China wants to do it. China is setting up to do it. And we know that the U.S. is talking about it. I mean, then you don't have to worry about those pesky people trying to save money, and you can track every transaction. So I think they're setting us up. I've been watching, Michael, for years now, the way that platinum has been trading for less than gold and less than palladium. And my gut feel is this is a test run for gold, trying to totally demonetize it and totally make it irrelevant. They can get platinum to become near worthless. They're going to try the same thing with gold. And it's all part of the crypto strategy. Maybe I'm a little over the top here, but it just occurred to me that there is absolutely no reason in the world for platinum, which is far rarer than gold, to be trading at a fraction of gold's price and less than 50% of palladium. They used to use it. They still use it. It has many uses, industrial mostly, but it's also considered a precious metal. But when you look at it compared to how gold's performed and palladium, it's a joke.
Yeah. Well, I agree that. I will also add to that since silver and palladium and platinum are also industrial metals, as you correctly point out, it's more also a comment on the fact that they're not pure money, whereas gold is pure money. It has industrial uses, but very few. So I think of gold as pure money, which is why it's outperforming other precious and semi-precious metals, which have industrial use, which is more a statement on the anemic state of global growth. If you look at the scars, I keep hearing about vaccines and cures, and I hope and pray that they're true. But I have it from the research that I've done, and I'm not a virologist or an epidemiologist by any means, but I talk to a lot of them and I read a lot of research about it. I think this virus, unfortunately, is going to be with us a very long time. In other words, it's not going to be like the measles, eradicating smallpox. You're going to have to get a vaccine often, like maybe every year, booster shots. It might not wipe out the virus entirely. I'm not saying that we should let it control our lives. The president is correct, shouldn't dominate our lives, but people still will be dying of SARS-CoV-2 every year, just like they do the flu. But I'm more worried, beyond that, I'm more worried about the scars left behind, the real scars, the economic scars left behind. For example, there's 100,000 businesses that have permanently closed their doors because of this virus. There's the number of permanently employed people, 3.8 million. That's on the rise. It's the highest number since 2013, Kerry. So we have real scars here. The labor force participation rate is shrinking again. So you have real scars being left behind. Not to mention, when you think about the corporate debt. So look, I'm talking about business debt, not just corporate business debt, which is now virtually 100% of GDP. We were already at a record high before the virus struck. You think about all of the debt service and overhang of this massive amount of corporate debt, most of which is insolvent. It's either triple B, which is one notch above junk, or junk. You've got a record number of zombie corporations. And the only thing holding this whole Band-Aid together, as we started the show with, is massively manipulated, artificially provided record low interest rates, 15 trillion negative globally. And when you finally get your inflation, and that's, by the way, as you know, I'm not teaching you anything or your audience, what does every central banker in the world want more than anything? Is inflation at 2% at least. And now we've learned it's an official edict by Jerome Powell that the Fed no longer wants stable prices. It no longer even wants 2% inflation. It wants 2% plus inflation for many years to make up for all the years it wasn't there. And I will tell you this, the Fed has very, very little control over inflation the way they would like to think they do. Okay, they can generate inflation. I'm not saying they can't generate inflation. And if the government really wants to generate inflation, it's the combination, an unholy union of a central bank that monetizes Treasury debt or whatever sovereign debt in every nation it is directly. Okay, direct monetization of Treasury debt. In other words, government spends, sends checks out to people, and the Fed or whatever the central bank is just buys it all. That's how you get inflation. But what I am saying also is that the control over inflation is very elusive. In other words, you look at the 70s. I don't think Arthur Burns wanted inflation running at 15%, but that's what we got. So we didn't get 2% plus, we got 15, and Volcker had to take rates to 20 to kill it. And if you look at what happened in the wake of the Great Recession, we tried and tried for 2%. We never really got there sustainably at all. Most years we missed it. And that's the reason, because we never went down the road of the universal basic income and helicopter money. We tried that this year. This is the first year we jumped the shark with that. And I've found in my life, and you'll probably agree with me, that once a government tries these, inroads into quantitative easing or universal basic income, they tend to stay around, and you can never really get out of ZIRP or QE or UBI. So it's coming back in 2021 with a vengeance, and that's why this election is so important too. I've heard people say the election is, inconsequential. It means a lot to me and my investors. I run a dynamic fund. It's the inflation, deflation, and economic cycle portfolio. It's a separate managed account. You need about 100,000 to sign up here. But it matters to me. Does the Senate go Democrat? Who is running the House is going to be, or Nancy Pelosi will be Speaker of the House. That's not up for debate. But do we have a blue wave? Do we have division? And do we have a Senate that's Republican and a Joe Biden president? That doesn't bode well for stimulus. By the way, we have a massive fiscal cliff that we're going over right now as we speak. Okay, we have a fiscal and monetary cliff that we're going over. And that's why Jerome Powell is begging Congress to print more money, to make him able to print more money so he can buy more Treasury debt. That's why Trump wants to go big or go home. And that's why Pelosi passed the HEROES Act, which is $3.3 trillion more. We already spent 3.3 more this year.
Yeah, well, I couldn't agree with you more. And it's it doesn't matter the party as far as how much stimulus goes out the door. I think that's baked in the cake. I just remember Milton Friedman saying there's nothing more permanent in life than a temporary tax. And I think he was wrong. I think government stimulus is probably more permanent than temporary taxes, temporary stimulus. I think it's with us forever now.
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Kerry, it's not just the United States. Do you remember, let's just turn the clock back to 2018, before the economy and the stock markets fell apart globally in the fall of 2018. Remember, we were supposed to raise interest rates here in the United States? 2.5%, maybe even 3%. And we were draining the balance sheet that was $4.5 trillion. We're taking it down maybe to $2 trillion. Those things were all supposed to be running in the background. You wouldn't even notice it. Just going to, kind of normalize the Fed funds rate. Normal Fed funds rate is 5-6%. It's not 2.5%. We couldn't even get there. So, and Europe ended QE, but never raised rates. Japan, forget about it. It's a disaster. They never even started to end QE. So, and here we are. All of us are back to zero. All of us are in QE, and not just 85 billion, which where it was in the peak of the wake of the Great Recession. We're supposedly printing $120 billion a month in QE. I mean, come on, I'm 57. I don't know how old you are, but you didn't start.
63.
63. So you've been doing the show for a long time, Kerry. Have you ever thought that you would be in a situation where normal, and everybody tells us, this is, we had a normal economy in 2019. Yet we were back in QE, and we're heading back to zero, and around the whole world was at 0% interest rates. The Fed's balance sheet was going back towards $4 trillion from going to 3.7. And we're supposed to consider that the best economy the world has ever seen.
Joke.
It's a joke.
A total joke. And like I always knew this day was coming. I was always hoping I would never have to live through it. Let my kids worry about it. But, but here's the thing, Michael, you can choose to be a winner or you can choose to be a loser. all of these crises, all of these disasters, I learned this again in 08 and 09, there are winners and there are losers. And if your mind is open, you can become a winner, right?
Listen, we've had thank God, we've had a great year here in Pento Portfolio Strategies. We don't sit back and whine and bemoan about what should be. And we don't even say, I'm investing for, this or that because someday it might work. We don't do that. We have a very complicated 20-point model that measures and maps the economy like a scientist would. So we want to know what's working now and what's going to work in the very near future, not what I'd like to happen someday. And that's why we don't tolerate losing very well. Don't like to lose money at all. I mean, of course, you can't make money every day for sure, unless you're Bernie Madoff. But
Or Goldman Sachs, JP Morgan.
Or Black. By the way, if you're BlackRock, guess who the Fed's buying all these junk bonds through? Buying junk bonds now. I didn't mention it, but you know that.
Yeah.
They're buying junk bonds. Guess who gets the heads up? BlackRock. It's always amazing to me that in the wake of the 2008 financial crisis, instead of, and I didn't agree on doing this. I'm just saying, instead of buying banks' mortgage-backed securities, which were worthless at the time, and bailing out banks, why don't we bail? If we're gonna monetize the fiat currency, if we're going to just print it, why not give it to people that actually need it to pay their mortgage? Why don't we just bail out banks? The question is, that's the question. The answer is that Wall Street and central banks around the Fed on Wall Street and the ECB, whatever, BOJ, they work for the financial system. They don't work for individuals. They don't work for the middle class. They don't work for you. They work for the big banks, period. And they prove it over and over and over again. Why are we, instead of giving people money on a continuous basis, again, not for it, but why have we stopped giving people checks to pay their mortgage and their credit cards and their student loans and their auto loans, which are coming off of forbearance very soon as we speak? Why are we giving money to BlackRock so they can buy junk bonds?
Yeah, there's something very wrong with that, and the idea that that they allow BlackRock to front run the entire market. Everybody gets screwed there.
Kerry, you're beautiful. You're a beautiful man. BlackRock went up $23 a share yesterday on blowout earnings, record amount of assets under management. I used to own BlackRock in the portfolio. Apparently, I sold it too early. In full disclosure, we did well with it, but not as well as we could have done. Is that who elected Jerome Powell and gave him permission to notify BlackRock what junk bonds, what insolvent corporate debt that they are going to buy? And why do we allow that to happen as a country? It's very aggravating to me.
Big scam. And there's no end in sight. Well, hey, follow the Pento portfolio strategy here and be a winner instead of sitting around wondering what to do and losing. Because I kind of did that in 08 and 09. Wasn't terrible, but I could have done so much better. This time, hey, times are good, what I do. And I see the precious metal sector, the junior miners, they're all exploding on the upside. We'll see how long it continues for, but for right now, seems like precious metals is kind of the place to be.
Well, I had a 20% position in precious metals. I have 15%. I sold a little bit because I realized a couple of weeks ago, that nominal long-term treasuries stopped declining even when they shouldn't be declining. The news flow was coming out, and I thought the news flow should bring treasury yields lower, so the bond price higher, yields lower. It just wasn't happening, which means as we go over the fiscal cliff, which means there'll be more disinflation in the short term than inflation. So you have to add, that adds to the interest rate complex, the yield you're getting. So gold likes falling real interest rates. And I believe, I don't know what the cap is, but I firmly believe, again, I'm not out of gold. I still own 15% of physical gold. in the portfolio. I would like to see for gold to really surge, to get to the point where it's probably hard to own too much of it, would be if, and I'm not predicting this, but I'm saying I'll model it and I'll measure it and see if it's the case. If we see growth start to fall again as we go over this fiscal and monetary cliff, which is happening now, yields start to fall, and you see an operation twist or a cap from the Fed on yields. In other words, the Fed might come in and say, I say that the 10-year and 30-year note is capped at X, and we will monetize unlimited amount of bonds to make sure that that yield never goes higher than that. We'll buy bonds through the printing press to keep those yields capped. In that scenario, real interest rates would plummet because the rate of inflation would be accelerating without any rise at all in nominal Treasury yields. That is the absolute, and the dollar would be rolling over too. That would be the rocket fuel for gold. You just can't have enough. That's what I'm waiting for. It's what I think could happen. It's hard to just, it's hard to get in Jerome Powell's head what he's going to do, but that very well could happen. Again, if that happens, you will not be able to own enough gold.
I think it's inevitable. They've shown no inclination towards fiscal or any financial sanity, any efficiency. And we just see this money getting stolen, whether it's the defense budget or whether it's PPP, going to Chinese companies, going to the Biden clan, wherever it might go. It's not going to the people who needed it the most. And every factor, every aspect, department of government that spends money is wasting it at prodigious rates like never before seen. And what's going to stop it, Michael? Really, what is going to bring it to an end?
Well, they don't want to bring it to end, Kerry. They want to actually come up with, they have, promoting the theory of MMT, UBI, where it just, you could just use the government's money, the government's wealth. What the government does best, which is print money. When Obama took office, was $10 trillion, went to $20 trillion when he left. So in 8 years, we got $10 trillion in debt. Now Trump is in the office for 4 years. We have $27 trillion in national debt. I mean, and we're going to add to the debt, much higher than nominal GDP and at an accelerating rate. Where does that go through history and tell me where that has ended well? You're going to have hype. You're going to end up intractable inflation. That's when you have a bond death spiral. Okay, as you get more inflation, bonds go lower. They have to print more money to buy the bonds, but the bond's still going lower, and the yield keeps going higher because in the end, once you inculcate to investors that you have engendered intractable inflation. I don't care what the Fed does. They don't have enough money to fight the Wall Street sales and the front running of Wall Street to short these bonds. There's nothing they'll be able to do about it. And you imagine with runaway inflation and runaway bond yields will do to a junk bond market. Apple, the Apple Corporation, Apple stock, not a junk bond, but it's a good company. But things come and go in technology. Sometimes there's better companies come along. They make better phones. Apple's 10-year bonds yield below U.S. 10-year Treasury.
Wow.
I mean, think what kind of carnage will happen to the corporate bond market, to the junk bond market, to the real estate market, to the stock market once inflation begins to run intractable. And I don't want it to run intractable. You don't want it to run intractable. But you know who can't seem to get inflation rising fast enough? Is the person who's most in charge of it, Jerome Powell. And all he needs to get it going, running intractable, almost hyperinflationary, you need a currency collapse, so it's very hard to get there. But for sure, double digits, at the very least, is for Powell or whoever's in charge of the Fed to have the cooperation of Congress and the presidency. That's all you need. I mean, if you pay people to lay fallow and run to the mailbox to get a check, Kamala Harris wants to give people, families, $120,000 a year until the virus is completely vanquished from our lives.
Well,
how do you define that? I'd like to know who's going to define that.
I guess we'll all have reparations then.
If you pay people to lay fallow, produce nothing, and just consume, making $120,000 a year in perpetuity, you'll have your intractable inflation faster than you'll imagine.
All right. Well, I think we'll leave it at that. So want to go take a look at Michael's website, pentoport.com, and send us an email, what you think, kl@kerrylutz.com. Twitter is @KerryLutz, Facebook page, Financial Survival Network. Sign up for your free newsletter. Michael, always a pleasure, and really appreciate you coming on the show.
Blessings to you, Mr. Lutz.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.